Question 1. Understanding risk management. A manufacturing company implements a new safety program aimed at reducing workplace injuries. The program includes employee training, regular safety audits, and updated machinery. Which of the following best describes the type of risk management strategy being employed by the company? A. Risk transfer. B. Risk avoidance. C. Risk reduction. D. Risk retention. Answer: C. Risk reduction. Explanation: the company is implementing measures that specifically aim to minimize the frequency and severity of workplace injuries, which falls under the category of risk reduction. Risk transfer involves shifting the risk to another party, often through insurance. While the company may also have insurance policies in place, this question focuses on their active measures to decrease risk. Risk avoidance would mean eliminating the activity that leads to risk, such as discontinuing the operation entirely, which is not the case here. Risk retention is when a company chooses to accept the risk rather than mitigate it, usually by budgeting for potential losses. In this scenario, the proactive steps taken indicate a focus on reducing risk rather than retaining it. Question 2. Scenario-based question. Mr. Thompson is a commercial property owner who has recently experienced a significant storm that damaged the roof of his building, leading to water intrusion and subsequent property damage. His insurance policy includes a standard exclusion for damage caused by wear and tear. What should Mr. Thompson consider regarding his insurance coverage and the potential claim for damages? A. His claim will likely be denied due to the exclusion for wear and tear, regardless of the storm's impact. B. He can submit a claim for the storm damage, as it is covered under Act of God, despite the wear and tear exclusion. C. He should assess whether the damage could have been exacerbated by poor maintenance to determine if the claim is valid. D. He must prove that the storm was the sole cause of the damage, negating any impact of the wear and tear exclusion. Answer: C. He should assess whether the damage could have been exacerbated by poor maintenance to determine if the claim is valid. Explanation: in Mr. Thompson's case, the insurance policy includes an exclusion for wear and tear, which means that damages attributed solely to lack of maintenance may not be covered. However, since the roof damage is also related to storm activity, he must evaluate how much of the damage was caused by the storm versus poor maintenance. Option is incorrect because while the exclusion for wear and tear is significant, it does not automatically deny the claim if storm damage is proven. Option B is misleading. While Acts of God can cover certain storm-related damages, the wear and tear exclusion still complicates matters. Option D misinterprets the claims process. Mr. Thompson does not need to prove the storm was the sole cause, but rather show that storm damage exists separately from any maintenance issues. Question 3. Ethics in insurance. An insurance agent discovers that a potential client has omitted significant information regarding their prior insurance claims when filling out the application. What is the most ethical course of action for the agent to take? A. Process the application as is to avoid losing the sale. B. Inform the client about the omission and ask for clarification before proceeding. C. Submit the application without addressing the omission to protect their commission. D. Deny the client coverage based on the omission without further discussion. Answer: B. Inform the client about the omission and ask for clarification before proceeding. Explanation: the agent's ethical responsibility includes ensuring that the insurance application is accurate and complete. By informing the client of the omission and seeking clarification, the agent upholds their duty of disclosure and maintains transparency. Option is unethical as it prioritizes the sale over legal obligations and client welfare. Option C disregards ethical standards and could lead to severe consequences if the omission results in a denied claim or fraud investigation. Option D is also inappropriate as it fails to engage the client and could damage the agent's reputation and business relationship. Question 4. Claims investigation techniques. During a claims investigation for a liability claim, the adjuster interviews witnesses and collects evidence. Which of the following methods is most likely to strengthen the validity of the claim? A. Only interviewing the claimant to get their account of the incident. B. Collecting video evidence from nearby surveillance cameras. C. Relying solely on police reports without further investigation. D. Avoiding witness statements to expedite the process. Answer: B. Collecting video evidence from nearby surveillance cameras. Explanation: collecting video evidence from surveillance cameras is one of the strongest methods to validate a claim as it provides objective, verifiable information about the incident. Option O is weak because interviewing only the claimant can lead to biased information and does not consider other perspectives. Option C is insufficient because police reports can contain inaccuracies or may not cover all aspects of the incident. Further investigation is typically necessary. Option D is counterproductive. Witness statements often provide valuable context and corroborate or dispute claims, thus playing a crucial role in the investigation process. Question 5. Understanding policy exclusions. A homeowner's insurance policy contains an exclusion for damage caused by floods. After a heavy rainstorm, the basement of the home is flooded, causing extensive damage. What is the homeowner's best course of action regarding insurance coverage? A. File a claim for the basement damage, citing that the storm caused the flood. B. Accept that the damage is not covered due to the flood exclusion and seek alternative solutions. C. Request a review of the policy terms to see if there are any loopholes in the flood exclusion. D. Submit a claim arguing that the flood was caused by poor drainage maintained by the municipality. Answer. B. Accept that the damage is not covered due to the flood exclusion and seek alternative solutions. Explanation. The homeowner's policy clearly states that damage caused by floods is excluded, and this exclusion typically cannot be circumvented by claiming that another event, the storm, caused the flood. Option is incorrect because the flood exclusion stands regardless of the storm's role. Option C may seem reasonable, but flood exclusions are usually explicit and policyholders should be aware of them upon signing the contract. Option D is also misguided. While municipal negligence can lead to claims, it does not negate the flood exclusion in the homeowner's policy. Question 6. Professional liability insurance. A graphic designer is sued for failing to deliver a project on time, which caused significant financial losses for their client. Which type of insurance would best protect the designer against this claim? A. General liability insurance. B. Professional liability insurance. C. Workers' compensation insurance. D. Property insurance. Answer. B. Professional liability insurance. Explanation. Professional liability insurance, also known as errors and omissions insurance, specifically protects professionals against claims arising from negligence, errors, or omissions in their work. Option A would not cover this scenario, as general liability insurance primarily addresses bodily injury and property damage claims, not professional services. Option C is irrelevant because workers' compensation insurance covers employee injuries, not claims made by clients. Option D does not apply. Property insurance protects physical assets but does not cover professional negligence. Question 7. Underwriting principles. An underwriter is assessing a commercial auto insurance application. Which factor is least likely to influence the underwriting decision? A. The driving history of the company's drivers. B. The types of goods transported by the vehicles. C. The size of the company's workforce. D. The company's financial stability and credit history. Answer. C. The size of the company's workforce. Explanation. While the driving history, the nature of the goods transported, and the company's financial stability directly affect risk assessment in commercial auto insurance, the size of the workforce is not typically a key factor in underwriting decisions. Option A is significant because a poor driving history indicates higher risk. Option B is crucial as certain goods may pose higher risks than others, e.g. hazardous materials. Option D matters as financial stability can affect the likelihood of filing claims and the company's ability to pay premiums. Question 8. Consumer protections in insurance. Which of the following is a consumer protection measure under West Virginia insurance law regarding claims? A. Insurers must pay claims within 30 days of submission, regardless of the investigation. B. Insurers can deny claims based on information obtained during the investigation without notifying the claimant. C. Insurers are required to provide a written explanation for any claim denials. D. Insurers can arbitrarily increase premiums for claims made in the previous year. Answer. C. Insurers are required to provide a written explanation for any claim denials. Explanation. West Virginia insurance laws require that when a claim is denied, insurers must provide a written explanation, allowing the claimant to understand the reason behind the denial and enabling them to appeal if necessary. Option A is incorrect because while timely payment is important, insurers must first conduct an investigation, which may take longer than 30 days. Option B violates consumer protection regulations. The claimant must be informed about the basis for claim denials. Option D is misleading, and while premiums may increase, they cannot be raised arbitrarily based on previous claims without just cause and proper notification. Question 9. Ethical responsibilities. An insurance agent is aware that their company is underwriting a policy for a high-risk client without appropriate risk assessment. What is the agent's ethical responsibility in this situation? A. Approve the policy to meet sales targets. B. Inform management of the potential issues and advocate for a thorough risk assessment. C. Remain silent as it is not the agent's responsibility to assess risk. D. Encourage the client to purchase additional coverage without disclosing the risk. Answer: B. Inform management of the potential issues and advocate for a thorough risk assessment. Explanation: the agent has an ethical obligation to ensure that all underwriting practices are conducted responsibly and transparently. By informing management, the agent is fulfilling their duty of disclosure and acting in the best interest of the client and the insurer. Option: a compromises ethical standards for personal gain, which is unacceptable. Option C is incorrect. Agents have a responsibility to advocate for proper risk assessments. Option D is unethical as it involves misrepresenting the risk to the client. Question 10. Risk assessment techniques. Which of the following methods is the least effective for assessing the risk associated with a new commercial insurance policy? A. Conducting on-site inspections of the business premises. B. Reviewing the company's loss history. C. Analyzing industry-wide statistical data on similar businesses. D. Relying solely on the owner's verbal assurances about safety practices. Answer: D. Relying solely on the owner's verbal assurances about safety practices. Explanation: relying only on verbal assurances from the business owner is the least effective method for assessing risk as it lacks objective verification and can lead to inaccuracies. Option is effective because on-site inspections provide direct observation of safety practices and hazards. Option B is crucial as reviewing loss history helps identify patterns that indicate potential risks. Option C is useful as industry-wide statistics can help contextualize the specific business's risk profile relative to others in the same field. Question 11. Types of casualty insurance. Which of the following types of insurance would specifically cover damages arising from a third party's allegations of negligence in a professional service? A. General liability insurance. B. Commercial auto insurance. C. Professional liability insurance. D. Property insurance. Answer: C. Professional liability insurance. Explanation: professional liability insurance, also known as errors and omissions insurance, is specifically designed to protect professionals against claims of negligence, errors, or omissions that occur while providing their services. Option A covers bodily injury and property damage claims but does not address negligence in professional services. Option B pertains to the operation of vehicles for business purposes and does not cover professional liability. Option D protects against damage to physical property and does not cover allegations of professional negligence. Question 12. Policy structure. In a commercial general liability CGL policy, which section typically outlines the obligations of the insurer after a claim is made? A. Declarations. B. Insuring agreement. C. Conditions. D. Exclusions. Answer: C. Conditions. Explanation: the conditions section of a CGL policy outlines the responsibilities and obligations of both the insurer and the insured after a claim is made, including notification of claims, cooperation during investigations, and the duty to mitigate damages. Option A provides basic information about the policy, such as the named insured and policy limits, but does not address claims obligations. Option B outlines what is covered by the policy but does not specify the actions required after a claim is filed. Option D lists what is not covered under the policy, which is not related to the obligations post-claim. Question 13. Claims handling process. An adjuster is reviewing a property damage claim and discovers that the insured has not maintained the property adequately, leading to increased damages. How should the adjuster proceed with the claim? A. Deny the claim outright due to lack of maintenance. B. Approve the claim but reduce the payout based on depreciation. C. Investigate further to determine if the lack of maintenance was a contributing factor to the damages. D. Recommend that the insured undertake repairs before further processing the claim. Answer: C. Investigate further to determine if the lack of maintenance was a contributing factor to the damages. Explanation: the adjuster should conduct a thorough investigation to determine the extent to which lack of maintenance contributed to the damages. This assessment is critical in deciding how the claim should be handled and whether the insurer is liable for the full extent of the damages. Option is inappropriate. The outright denial without thorough investigation is not compliant with fair claims practices. Option B is misleading because depreciation does not apply in cases where lack of maintenance is involved. The liability must be established first. Option D is unnecessary and may not be appropriate in claims handling. Question 14. Risk management strategies. Which of the following strategies is least effective for mitigating risk in a workplace environment? A. Implementing regular safety training for employees. B. Purchasing additional insurance coverage for specific risks. C. Ignoring minor hazards to focus on larger issues. D. Conducting periodic risk assessments and audits. Answer: C. Ignoring minor hazards to focus on larger issues. Explanation: ignoring minor hazards can lead to larger issues down the road, as small risks can accumulate and lead to significant losses. A comprehensive risk management strategy requires addressing all potential hazards. Option A is effective as regular training helps employees recognize and avoid hazards. Option B provides financial protection but does not reduce the occurrence of risks. Option D is crucial for identifying and mitigating risks before they lead to claims. Question 15. Underwriting principles. What is the primary purpose of loss ratios in the underwriting process? A. To assess the financial health of an insurance company. B. To determine the appropriate premium for a policy. C. To evaluate the performance of individual policies. D. To identify areas for improvement in risk management. Answer: B. To determine the appropriate premium for a policy. Explanation: loss ratios are used to measure the percentage of claims paid compared to the premiums earned. A higher loss ratio indicates that an insurer may need to raise premiums to cover the costs associated with claims. Option A is partially correct. While loss ratios can indicate financial health, they are more directly related to premium determination. Option C is misleading, and loss ratios typically apply to overall portfolio performance rather than individual policies. Option D is incorrect because loss ratios do not directly identify areas for risk management improvement. Question 16. Consumer protections. Under West Virginia insurance law, which practice is prohibited to protect consumers during the claims process? A. Denying a claim without an investigation. B. Offering settlements based on market conditions. C. Conducting independent investigations. D. Requiring claimants to submit claims in a specific format. Answer A. Denying a claim without an investigation. Explanation: insurance laws require that all claims be thoroughly investigated before any denial can occur. This protects consumers from unjust treatment and ensures fair claims handling practices. Option B is allowed as long as the settlement reflects the terms of the policy. Option C is permitted and often necessary, and insurers can conduct independent investigations as part of the claims process. Option D can be a standard procedure provided it complies with regulatory requirements. Question 17. Ethical responsibilities. An insurance agent discovers that a colleague has been misrepresenting coverage details to secure sales. What is the agent's best course of action? A. Confront the colleague directly and demand they stop. B. Report the colleague's behavior to the management or regulatory authority. C. Ignore the situation as it does not directly affect their sales. D. Engage in similar practices to remain competitive. Answer: B. Report the colleague's behavior to the management or regulatory authority. Explanation: ethically, the agent has a responsibility to report any fraudulent or unethical behavior that could harm clients or the insurance industry. Ignoring or participating in unethical practices is detrimental to the profession. Option A may not be effective. A confrontation could escalate the situation without resolution. Option C is unethical, as ignoring misconduct can lead to broader issues for consumers and the industry. Option D is contrary to ethical standards and could result in serious professional consequences. Question 18. Risk assessment techniques. Which of the following is the most effective technique for evaluating potential risks for a new business venture? A. Conducting an online survey of potential customers. B. Performing a SWOT analysis: strengths, weaknesses, opportunities, threats. C. Relying on anecdotal evidence from similar businesses. D. Creating a focus group with current employees. Answer: B. Performing a SWOT analysis: strengths, weaknesses, opportunities, threats. Explanation: a SWOT analysis provides a comprehensive framework for identifying internal and external factors that could affect the business venture. It allows for a thorough assessment of risks and opportunities. Option A offers limited insights into risk assessment and does not account for internal business factors. Option C can be biased and is not a reliable method for assessing risk comprehensively. Option D may provide some insights but does not encompass the broader risks associated with the business venture. Question 19. Legal principles. Which of the following elements must be present to establish a valid insurance contract? A. Unilateral agreement between parties. B. Oral agreement without documentation. C. Consideration provided by both parties. D. Written contract signed only by the insurer. Answer: C. Consideration provided by both parties. Explanation: for an insurance contract to be valid, there must be consideration, meaning that both parties must provide something of value. This typically includes the premium paid by the insured and the promise of coverage provided by the insurer. Option is incorrect because valid contracts require mutual agreement, not unilateral. Option B is invalid as insurance contracts must be in writing to be enforceable. Option D is misleading as both parties must sign the contract for it to be valid. Question 20. Emerging trends in casualty insurance. Which of the following trends is currently impacting the casualty insurance industry? A. Increasing reliance on traditional underwriting practices without technological integration. B. The rise of big data analytics in underwriting and claims processing. C. Decreased use of online platforms for policy sales and management. D. A decline in consumer demand for comprehensive coverage options. Answer: B. The rise of big data analytics in underwriting and claims processing. Explanation: big data analytics is revolutionizing the casualty insurance industry by allowing insurers to assess risks more accurately, streamline claims processing, and enhance customer experiences through personalized offerings. Option is incorrect as the industry is moving towards technological integration. Option C is also incorrect. Online platforms are increasingly being utilized for policy sales and management. Option D is misleading. A consumer demand for comprehensive coverage has been on the rise, especially in complex risk environments. Question 21. Coverage types. Which of the following best describes the coverage provided by an umbrella liability insurance policy? A. Coverage for physical damage to the insured's property only. B. Coverage that supplements primary liability policies extending limits in coverage. C. Coverage for workers' compensation claims made by employees. D. Coverage for specific perils listed in a homeowner's insurance policy. Answer: B. Coverage that supplements primary liability policies extending limits and coverage. Explanation: umbrella liability insurance provides additional coverage beyond the limits of underlying policies such as general liability, auto liability, and certain other types of coverage. It can cover broader risks that may not be included in the underlying policies. Option is incorrect. Umbrella policies do not cover physical damage to property. Option C refers to workers' compensation insurance, which is separate from liability coverage. Option D describes property insurance coverage and does not relate to liability insurance. Question 22. Exclusions and policies. Which of the following is commonly excluded from coverage in a standard commercial general liability (CGL) policy? A. Bodily injury caused by the insured's product. B. Property damage resulting from a pollution incident. C. Personal injury resulting from advertising activities. D. Bodily injury occurring on the insured's premises. Answer: B. Property damage resulting from a pollution incident. Explanation: pollution-related damages are generally excluded from standard CGL policies unless the policy specifically includes an endorsement that provides coverage for pollution incidents. Option is incorrect. Bodily injury caused by a product is generally covered. Option C is incorrect. Personal injury related to advertising is usually included in CGL coverage. Option D is also incorrect, as bodily injury on the insured's premises is typically covered. Question 23. Insurer's duties. What is the primary duty of an insurer after a claim is made? A. To deny claims that exceed the policy limits. B. To conduct an independent investigation to determine the validity of the claim. C. To pay all claims immediately, regardless of the circumstances. D. To communicate the claim status only when the investigation is complete. Answer: B. To conduct an independent investigation to determine the validity of the claim. Explanation: insurers have a duty to investigate claims thoroughly and impartially to determine their validity. This includes gathering evidence, interviewing witnesses, and reviewing relevant documentation before making a decision. Option is misleading that the insurer should first assess the claim's validity before considering policy limits. Option C is incorrect. Insurers must evaluate claims before payment. Option D is incorrect. While claim status updates may be communicated, ongoing communication is important throughout the claims process. Question 24. Claim settlement. When settling a claim under a property insurance policy, which of the following is typically true regarding actual cash value (ACV)? A. ACV is calculated by subtracting depreciation from replacement cost. B. ACV provides coverage for replacement costs without depreciation. C. ACV includes both the market value and replacement cost of the property. D. ACV is the amount the insured paid for the property originally. Answer A. ACV is calculated by subtracting depreciation from replacement cost. Explanation: actual cash value (ACV) is determined by taking the replacement cost of the damaged property and subtracting depreciation. This reflects the current value of the property, factoring in wear and tear over time. Option B is incorrect. The ACV does not provide full replacement cost. Option C is misleading. ACV does not combine both values but focuses on replacement cost minus depreciation. Option D is inaccurate, as ACV does not consider the original purchase price. Question 25. Risk transfer. What is the primary benefit of risk transfer in insurance? A. It eliminates all potential risks. B. It shifts the financial burden of loss to another party. C. It decreases the cost of premiums for the insured. D. It allows the insured to handle claims independently. Answer B. It shifts the financial burden of loss to another party. Explanation: risk transfer is a key principle of insurance that allows the insured to transfer the financial responsibility of certain risks to the insurer. This means that in the event of a loss, the insurance company bears the cost instead of the insured. Option A is incorrect. Insurance does not eliminate risks but manages them. Option C is misleading. While risk transfer can impact premiums, it does not guarantee a decrease. Option D is incorrect. Risk transfer typically means the insurer manages claims. Question 26. Ethical conduct in insurance. Which of the following actions would violate ethical conduct for insurance agents? A. Providing clients with clear and complete information about policy options. B. Failing to disclose commissions earned on policy sales. C. Recommending policies that align with the client's needs. D. Maintaining accurate records of client interactions. Answer B. Failing to disclose commissions earned on policy sales. Explanation: insurance agents are required to disclose any commissions or compensation they receive related to the sale of policies. Transparency about financial incentives is essential for maintaining trust and ethical standards in the industry. Option is ethical and necessary for informed decision-making. Option C aligns with ethical conduct, ensuring that clients receive appropriate recommendations. Option D is also an ethical practice that supports accountability and accuracy. Question 27. Coverage limits. Under a standard auto insurance policy, which of the following is generally considered a limit of liability? A. The amount of deductible the insured must pay before coverage applies. B. The maximum amount the insurer will pay for a covered loss. C. The minimum amount of coverage required by state law. D. The total amount of premium paid by the insured over the policy term. Answer B. The maximum amount the insurer will pay for a covered loss. Explanation: the limit of liability refers to the highest amount that an insurance policy will pay for a covered claim. This amount is specified in the policy and is critical in understanding coverage limits. Option A refers to the deductible, which is not a limit of liability but a cost to the insured. Option C pertains to state-mandated minimums, not the policy limit itself. Option D is unrelated, as it reflects premium payments rather than coverage limits. Question 20. Homeowners insurance. What is typically covered under the personal property section of a standard homeowners insurance policy? A. Structures attached to the dwelling. B. Vehicles parked on the premises. C. Personal belongings owned by the insured. D. Property owned by tenants residing in the home. Answer C. Personal belongings owned by the insured. Explanation: the personal property section of a homeowner's policy covers the insured's personal belongings, such as furniture, clothing, and electronics, against risks like theft, fire, or vandalism. Option A is incorrect. Structures attached to the dwelling are typically covered under the dwelling coverage. Option B is misleading. Vehicles are generally excluded from homeowners insurance and covered under auto insurance. Option D is incorrect, as tenants' property is usually not covered under the landlord's homeowners policy. Question 29. Business interruption insurance. Which of the following best describes the purpose of business interruption insurance? A. To cover liability claims arising from business operations. B. To provide compensation for lost income during a period of disruption. C. To insure against property damage caused by natural disasters. D. To protect against data breaches and cyber attacks. Answer B. To provide compensation for lost income during a period of disruption. Explanation: business interruption insurance is designed to compensate businesses for lost income during periods when operations are halted due to covered causes such as property damage from a fire. Option A describes general liability insurance, not business interruption. Option C relates to property insurance, which covers physical damages rather than income loss. Option D pertains to cyber insurance, which is a separate coverage. Question 30. Regulatory framework. Which agency is primarily responsible for regulating the insurance industry in West Virginia? A. National Association of Insurance Commissioners, NAIC. B. West Virginia Department of Insurance. C. Federal Insurance Office, FIO. D. Insurance Information Institute, OMINST. Answer: B. West Virginia Department of Insurance. Explanation: the West Virginia Department of Insurance is the primary regulatory body overseeing the insurance industry within the state. It ensures compliance with state laws, oversees licensing, and protects consumers. Option: is ISCA national organization that provides guidelines but does not regulate insurance at the state level. Option C focuses on national insurance issues and does not regulate state insurance markets. Option D is an educational organization and does not have regulatory authority.